So who is my guest this week? On his X profile, he describes himself as a trader. On his market-focused Substack page, he promises readers a review of today's action and a look at the profit opportunities for the next trading day. He's also a very witty writer if you follow his work. A self-described solid drummer, a terrible poker player, and someone who apparently really hates Earl Grey tea, which we're going to have to get into. His name's Brian Lund, he's publisher of the Lund Loop, and he's ready to talk markets for this week's episode. Brian, welcome to the podcast.
You've been reading my Twitter profile, huh?
I have. I follow your work. It's great. And, it's unfortunate what happened to you at Starbucks the other day, but hopefully.
I know, right? What a tragedy.
In any event, this is the first time I've had you on the podcast. So why don't you start by talking a little bit about your background and what it is you do?
Yeah. So look, I'm a retail trader, never been an institutional trader. About a month after I turned 18 back in 1985, I walked into a Sears, because back then they used to have Dean Witter brokerages in Sears. So right between the Craftsman tools and the Kenmore washers, I walked up to the broker on duty and said, I'd like to buy 300 shares of Altos Computers. That was my first trade, and I've been a retail trader ever since.
Great. Yeah, the good old stocks and socks days, huh?
Yeah.
All right. Well, again, so these days, I follow some of the big picture stuff you do on Anecdote and some of what you do for the Lund Loop. Talk a little bit about what it is that your organization does and kind of how it works for traders.
Yeah. So, I always say that trading isn't easy, but it doesn't have to be complicated. And I think everybody goes on that natural arc when they start trading. They want to throw every indicator in there. They want to do every study. We've seen chart crimes before. My whole idea around the market after doing this for 37 years is to simplify it. So I'm always looking for 2 to 3 major things. And this is what I talk about in the Lund Loop. One is I always want to know what stage the market's in, right? Are we in a risk off or a risk on, and where we are in that, continuum, because it's so much different when you're trading with a tailwind opposed to a headwind. Then once I determine what the market situation is, I'm trying to find trade ideas that present me with the best risk reward opportunities, because as we all know, if you're trying to take trades where that's out of balance, it's going to be really tough, right? So, and then after that, I'm using technical analysis, and I don't use any fundamental analysis. I just try to keep it very simple. I use moving averages, I use support and resistance lines, sometimes trend lines, and that's it. And just try to keep it really simple and keep it really boring, because I think the dirty secret about trading is it's not supposed to be exciting. It's supposed to be very cookie cutter. You figure out what your methodology is, what works for you, and you just do it over and over and over again. And as long as that is producing you profits, then that's the name of the game.
Yeah. Let me ask you about the sort of social aspect and the social learning aspect of trading. I mean, it seems like obviously you have what, Discord discussion groups and things like that. It seems like so many people are learning to trade and continue to educate themselves that way. So I'm kind of curious as to what your thoughts are on that.
Well, look, it's a double-edged sword. I think if you're in the wrong Discord group or you're on the wrong, platform, it can be bad. It's all about curation, right? And the more fine-tuned your curation is, the better. And what I mean by that is, you should be following or engaging with people that are really trading, that are using a methodology. They're not just out there trying to sell a newsletter or sell a system. I think we have a lot of what I call social traders out there that are not really trading, but they're kind of in the business of trading.
Yeah.
That's why with my Discord, with the Lund Loop, it's really great because everybody is in there for one reason. It's to help everyone else get better at what they're doing. I have this rule that we don't talk politics in there, we don't talk sports, and we don't talk macrame. Absolutely. Any one of those three, and you get kicked right out. So we focus on the markets, we focus on what we're there to do, and it's a good community with really good curation.
Yeah, I'm glad you brought up the political issue, because I know you posted the other day about how people have to keep perspective in this market. I mean, emotions were running wild heading up into the election and clearly after that. So how does a good trader take that, separate themselves from that?
Well, I think that's where technical analysis comes in, because politics is just another distraction, right? It could be earnings, it could be a narrative about a story, it could be, we've seen obviously a lot of this around meme stocks and altcoins. And when you're following technical analysis, it just filters all that out, right? Like you can have a best political story, right? Or you can have the best narrative behind a great operator in a company. As long as the technicals are confirming that, that's great. But once they diverge, you got to go with the technicals, right? And every time that I've ignored that advice, my advice to myself, and I've gone with the narrative, that's when I've had my biggest losses. So politics is just another version of that narrative, fundamental, non-objective way of looking at the markets.
So let's talk a little bit about timeframes and indicators. I mean, again, I have all kinds of traders on the show. Some are ultra short-term traders, some are swing traders, and so on. Where do you kind of fit in that range? And what do you like or find the most useful indicators in this current market?
Yeah, so I always tell my subscribers, if you find that I'm scalping, that's a bad sign, right? Because the shorter term I'm going, that means the less opportunities there are in the market. I think fat pitch in the market is swing trading. That is where you get the best bang for your buck, meaning the most potential for profit with the least, having to micromanage your position. Unfortunately, the market doesn't always give us an environment where you can swing trade.
Yeah.
But as I've gotten older, I've gotten better at being more patient and waiting for those times when the market is, when the odds are in my favor. I say that trading is somewhat of a young man's game, especially if you're like a day trader and you want to be looking at like 5-minute charts or tick charts. I did that for years. I'm in a different place. I'm 57. I've got a family. I've got a life outside of the market. So for me, it's swing trading is really the best opportunity. I'll do a day trade here and there, or even a
Yeah.
scalp if something looks interesting. But for the most part, I tend to be in that intermediate term time frame.
Are you seeing any issues, any problems, sort of trip ups that your listeners, subscribers are bringing up more these days? I'm just kind of curious if there's issues that you are running into a lot in terms of helping people in this market environment.
Well, I think something you alluded to before, whether it's politics or whether it's news stories, there's so much more noise in the market than when I started doing this in the 80s and 90s. So I think people do get tripped up by that. But ultimately, it all comes back to the same thing. And this is what I'm going to be talking about when I'm at the Money Show, is our biggest enemy is always the person in the mirror, right? I mean, you can have the best system for finding winning stocks. You can even have good methodologies for risk management. But if you undermine them because of some emotional quirk you have that you don't even know you have, then it all goes out the window. So I think focusing on someone's own emotions, their own psychology, that's always going to be the biggest hurdle for any trader.
Sure. Okay. I know it's going to be basically an eternity between now and February when you're in Vegas. I won't ask you what you plan to say about the markets then, but with the markets that we have now, what are your thoughts here on the environment? Obviously, we had the huge post-election rally. We've retraced some of that. How do you see things shaking out?
Yeah, that's a great question. So, look, like we said, let's keep politics out of this. However, my gut from doing this for so long, that big pop we had after the election, that kind of felt a little exuberant to me. It felt almost like I would say like a blow off top, not in the sense like that's the end of the bull market, but that we just got ahead of ourselves. I mean, if you look at the SPX in the 2 years running up into the election, right? We're
Yeah.
just, everyone knows we've been in this massive bull run, and then the election results come out, we gap higher. So I think some things are ahead of themselves. I think we need a little bit of a pullback as we record this. We're going into Thanksgiving weekend or week next week, generally one of the more bullish weeks. If we could just go sideways this week, if we just consolidate sideways, I think that would give us a nice range where a lot of stocks would set up and we could define our risk reward. So, short term, I think we got a little bit ahead of ourselves, but I think overall in the long term, I think we're obviously still in a massive uptrend.
Okay. And I wanted to ask about the breadth issue of the market. I don't know how closely you follow that and how much it concerns you or doesn't, but I know obviously we had back in the day the Mag 7 market. Now it seems like we have a lot more sector participation. Any thoughts on that and kind of what that means moving forward?
So that kind of falls into more of the fundamentals that I try not to pay attention to. I mean, here's the way I do it, right? If I want to pay attention to some sort of macroeconomic or more fundamental thing, I outsource that. Like I know
Yeah.
people that do that really well. Like you've had the guys from All Star Charts on the podcast before. They're great, right?
Yeah.
That's where I'll go to, and I'll maybe pick up some information there. I try to ignore most of that, though. I try to just focus on price action. Like with all fundamental indicators or stories, if you have them at your back, right, if they align with what your technicals are doing, that's great. Like I love that. But if they don't, then I just try to ignore them.
Got it. Well, then let's talk technically briefly about a couple other asset classes. I mean, Bitcoin, obviously, we all know the story there, the crypto presidency, whatever. What are your thoughts on the big move we've seen there coming after a pretty good year, frankly?
Yeah, again, it does feel a little bit short term, like it's gotten ahead of itself. I know everyone's got target on 100,000. I think it's dangerous to think that that has to happen. One of the things I tell my subscribers is that you should never get too married to a theory, because it's not so much that that theory may or may not work out. It's that when you're so focused on that, you're not open to what could happen. And I think one of the greatest examples of that was like in October of 2022. Who thought that the housing stocks were going to go on a run then, right? We had massive inflation, interest rates were going through the roof, and people were like, they weren't even thinking about that
Yeah.
because they were thinking about the market's going to go lower. And then, they just went on this massive run. So I think when it comes to Bitcoin right now, it does feel a little bit ahead of itself. Again, I'm always interested in getting into stocks or coins when they're coming out of a base, not when they're extended. So I think probably needs some backing and filling, but who knows? With Bitcoin, it's a whole different animal. As you know, you've done this for a long time. It just doesn't trade the same way stocks do. So anything could happen.
Yeah. I guess that would lead to one or two last questions here before I kind of summarize things. And that's anything that looks attractive to you that maybe might be off people's radar because there's no good narrative behind it. Anything technically speaking that might be turning that corner, like you just mentioned.
Yeah, so I'm going to just contradict everything I said about technicals and not paying attention to stories right now. There's a stock that I've been watching for a long time, AI, right? I think it's C3.ai, right? It's a AI play, and it has not gotten out of its own way. And I keep watching it, keep watching. The reason I keep watching it is because the CEO, the founder, Ted Siebel from Siebel Systems, is just a fantastic operator. And if anyone knows him from back in the day, this is a guy who was one of Larry Ellison's top guys in Oracle. He had some suggestions on how Oracle should go. Larry said no, so he quit. He started his own company, Siebel Systems. Larry Ellison said, "We're going to crush you." And about 9 or 10 years later, he had to buy the company for $6 billion. Right? This guy is a massive operator. He survived being gored by an elephant in Africa. You can read that story. And so just today, they announced that they are starting a partnership with Microsoft for enterprise software for AI. And the stock, of course, is popping big. So
Yeah.
I like when that narrative that I've been following for a long time is coinciding with the technicals. Now, will it continue? Will it fall through? I don't know, but that's something that I've really been watching and I'm keeping my eye on, that company.
Okay. Great. I guess one last thing I'd say is any groups that kind of fit the bill too, any that you think are turning, whether it's financials, industrials, anything like that, or do you just not really get into the sort of sector analysis when it comes to charting?
No, I do. I mean, right now, again, as we record this going into Thanksgiving next week, a lot of sectors actually look weak. We've seen semis start to roll. We saw XBI, right? The biotechs just get hammered.
Yeah.
Now we have Nvidia tomorrow, so that could change. Everything kind of looks weak now, except for banking, right? And as long as XLF and KRE are moving to new highs, it's really hard for the market to come in too much. So I'm going to watch those to see, do these other sectors firm up and start to go in the same direction as XLF, or does XLF start to weaken and start to go in the same direction as these other sectors? And right now, it's a coin flip. So.
Got it. Okay. Well, as we wrap things up, I mean, again, you're going to be joining us for the 2025 Money Show Traders Expo in Las Vegas. That's in February. And I found it's a very interesting topic. You have your biggest trading obstacle is to essentially look in the mirror. Briefly summarize what people are going to hear or what you might be passing on there if somebody's going to be coming to your session.
Yeah, so I'm going to go through some of the ways that we self-sabotage ourselves in the market, and I'm going to take a different tack. Like I know a lot of people have probably read the books like The Disciplined Trader, Trading in the Zone by Mark Douglas. Great books, but they're a little esoteric. They don't really apply, I don't think, too much in the real world. So I'm going to talk about some real world ways in which we sabotage ourselves, and then I'm going to go through 3 or 4. I wouldn't say solutions, but ways you can mitigate those and try to make it so that they don't really impact your trading or your investing.
Great. Well, Brian, again, thank you so much for your insights. Viewers, if you're watching this, you want to learn more from Brian, he's going to be speaking at that event, the Money Show Traders Expo Las Vegas. It runs February 17 to 19 at the Paris Las Vegas Resort. You can find more details and click on the link to register below. Brian, thanks again for your time. Really appreciate it.
Yeah, thanks for having me.